Welcome back to the channel, guys. Welcome back to the M1 Finance Portfolio Review. Man, it's been a good one, actually. We're up plus $9,074. The total return right now is sitting at 45%. The total portfolio value right now is actually sitting at $36,212. That includes about $1,300, almost $1,400 worth of cash that has yet to be deployed into dividend-paying stocks, passive income-generating stocks. But yeah, guys, so I've been at this thing for 2 years, and we're going to keep pushing this through. The goal here is to retire free, to retire early, or at least, even if I don't retire early, the goal is to be able to have the option to retire early and not to be tied to a 9-to-5 job. And so far, so good. Total market gains of $6,856, earned dividends of $2,217, and the number will continue to grow. I've got all sorts of sectors here, including some of my favorite ETF, dividend-paying ETFs. I've got SCHD here, and I've got SPHD here as well. Moving on, though, the stock market has really been rallying back, and I don't know if the worst is behind us, but it certainly seems like it. Gas prices a little bit lower recently, and the Dow Jones has literally come off the lows of roughly 29,000 points on the Dow. The S&P 500 has bounced back. So is the stock market crash behind us? NASDAQ is sitting at $13,332, or 32 points, I should say. And Rivian posts second quarter revenue above expectations, or above estimates or expectations, I should say, but expects a wider loss for the year. Now, this comes on the backs of the Inflation Reduction Act, which is actually looking to dump quite a few pennies, or I should say dollars, toward vehicular purchase incentives of electric vehicles. So if you guys aren't aware, recently the Biden administration has taken strides to move forward with this Inflation Reduction Act, which is actually going to potentially provide up to $7,500 in cash rebates or checks to help push the demand for electric vehicles. Rivian Automotive, as well as Tesla, as well as Ford Motor Company with their Ford F-150 Lightning, as well as many other automotive companies that produce electric vehicles, stand to see their sales increase as a result of more and more Americans having access to this potential $7,500 in tax credits toward the purchase of EV vehicles or electric vehicles. Electric vehicle maker Rivian Automotive maintained its full year guidance for deliveries on Thursday. Said that the automaker is actually reporting second quarter revenue that was higher than what Wall Street expected. They go on to say that they've trimmed its full year financial outlook, saying that investors should now expect a wider loss and lower capital expenditures than it had previously forecast. And here we are with the numbers from Rivian's second quarter report compared with average Wall Street analyst expectations. So the revenue was coming in at $364 million versus the $337 million, which was expected. Not a bad upside, especially in the face of higher inflation and a potentially slowing economy. Now, that might explain the future outlook of the company. The company had $15 billion in cash and equivalents remaining as of June 30th, which was down from $17 billion in March 31st. Now, Rivian said Thursday that it had 98,000 net pre-orders of its R1 series truck and SUV as of June 30th. It had over 90,000 pre-orders on May 1st when it first reported first quarter results. Now, Rivian said that it expects $2 billion in capital expenditures for the year, down from the $2.6 billion in its May guidance. Not a great sign for Rivian. And I don't know if this is going to be an industry-wide pullback of expectations. Will we see the likes of Tesla doing the same, pulling back future earnings? That remains to be seen. Now, Disney is actually raising their prices, and Disney is actually one of the stocks in my portfolio right now, pays a fairly good dividend, and they're actually going to be raising the price of their ad-free Disney Plus and Hulu service. Disney CEO is expected or suggested in an exclusive CNBC interview a price increase may also be coming at the theme parks so long as the demand remains strong. So it's going to be economically dependent if we see those price hikes moving forward in the theme parks. But so here we go. Another American company raising their prices again, but Disney is increasing the price on their streaming products and signaled that a price hike could be in the works at the theme parks as well. I mean, last time I've been to Disney, I remember bringing my family of 3 through there, and this was before they raised any prices. This is about 3 years ago. We spent upwards of $1,000 just for 3 people for a 1-day visit to Disney. And, it's amazing how many families can afford, even in, this high inflation environment, to still go to Disney and to these theme parks. So this actually says a lot about the economy and a lot about the stocks that we hold that are paying dividends. And hopefully they will continue to pay dividends and even grow their dividends going into the future. On Wednesday, Disney said that the price of Disney Plus without ads will be jumping $3 per month to $10.99 starting December the 8th. And Hulu with ads will increase by $1 per month to $7.99. And Hulu without ads will jump $2 a month to $14.99. So anyway, just wanted to give you guys a quick update on where we stand with the market. Wanted to give you guys a quick update and recap of my M1 Finance Dividend Portfolio. And how we're doing, how we're performing, and we're continuing to grow moving forward. Now, although seems like I was kind of right so far about the call about the stock market kind of bottoming out, obviously, who knows? Only the future can determine exactly where we go with the stock market. I don't particularly try to time the market. I believe in the thought process of time in the market trumps time or timing the market. So that's what I do. In fact, my portfolio benefits more from the markets declining because I can get great companies at discounted prices. And as the market's rebounding, I'm paying more and more for great companies. And so you just can't quite make as much money as you could, obviously, if the stock price was lower. But anyway, guys, this is where we stand on the dividend portfolio today. Happy investing, happy dividend growing, and I wish you guys the best of luck in your passive income journeys.